The headlines are blaring: 10% credit card interest rates and 6% mortgages, all painted as victories for the average American. But here's the ugly truth. This isn't a win. It's a trap. What you're witnessing in 2026 is a dangerous game in American monetary policy. And this time, you might be the one who pays the price. Stay with me, because by the end of this, your entire view of the economy will change. Now, let's break it down. What's actually happening here isn't just about interest rates. It's about control, about how the cost of credit is being manipulated, not for your benefit, but for political gain. You see, what the headlines aren't telling you is that the true cost of this victory will hit millions of Americans harder than you can imagine. And it's all about the 2026 midterms. So what's really behind these rates? Why is this being done, and who stands to gain? Here's where it gets real. The government is manipulating the cost of money, but it's not just for show. You know that 10% credit card cap? It sounds nice, right? A break for the average American against the greedy banks. But here's the catch. It's a lie. Banks can't make money at 10%. Do you know what happens when they can't make money? They shut it down. And when that happens, who gets left out in the cold? It's the 47 million Americans with subprime credit scores. They still need credit. So where do they go? The payday lenders, the pawn shops, and that's just the beginning. Now let's turn up the heat. This isn't just about credit cards anymore. It's about the very system itself. When you push rates down for political reasons, things start to unravel. Sound familiar? This isn't the first time in history that politics has played with the economy. Remember the 1970s? Nixon pressured the Fed to keep rates low to secure his re-election. And we saw the result: runaway inflation, a devastating recession, and a complete economic collapse. Fast forward to 2026, and we're on that exact same path. And this time, the stakes are even higher. You won't just lose money, you could lose your future. Here's where it all clicks. The banks can't make money at 10%. So what happens next? They start closing accounts, but it doesn't stop there. The real shocker, the 47 million Americans with subprime credit scores, they don't have options. Their credit needs won't disappear just because the banks say no. So what do they do when they need cash fast? They're forced into the hands of payday lenders charging 400% interest, pawn shops, and worse. The system is rigged against them. And the worst part, this is exactly what the banks want. They know they'll lose less by abandoning subprime borrowers than by keeping their accounts open. But at what cost to the people who need credit the most? But it gets worse. When banks shut down subprime credit lines, where does that leave us? Well, the pressure starts mounting. Think about this. The people who need credit the most, the ones with bad credit scores, are being pushed into dangerous territory. Payday lenders with interest rates as high as 400% aren't just a minor inconvenience. They're a trap. And it doesn't stop at payday lenders. You have pawn shops, title loans that put people's cars at risk, and even illegal loan sharks preying on the desperate. This is the financial collapse in slow motion. And the real kicker? If this continues, it could get worse, much worse. Now let's step back and look at the bigger picture. This isn't just about a few bad policies. This is about real people. People like you. Imagine needing credit in an emergency, but all the options you have are either predatory or unavailable. Your car breaks down and suddenly you're facing a choice. Pay 400% interest just to survive, or risk losing everything. This is no longer a distant issue. It's happening right now to millions of Americans who can't even access the credit they need to get by. If you recognize this, if it feels familiar, drop a comment below and let us know how this is affecting you. But here's the real insight you won't hear in the mainstream. This isn't just a financial crisis, it's a systemic issue. So why does this keep happening? Simple: power. The government controls the cost of money, and when that happens, the system is rigged. You're seeing the effects of political leverage on an economy that was supposed to be driven by market forces. When the government can keep rates artificially low, it creates bubbles. It rewards inefficiency and lets weak companies survive, even though they're just draining capital. This isn't capitalism. This is a managed economy. And if we don't address it now, the collapse will be worse than anything we've seen before. Now let's look ahead. What happens next? There are two possible futures here, and neither one is ideal. On one side, you have the potential for a major market correction. If inflation continues to climb, and the Fed finally has to raise rates, you'll see a crash But there's another path. The political pressure to keep rates low could continue. If that happens, we're looking at more zombie companies, more bubbles, and a deeper financial repression. We might be able to skate by for a while, but eventually the cracks will show. And when they do, it will be devastating. The question is, which path will we take, and how soon will we know? In the end, this entire system is a giant game of smoke and mirrors. The money, the interest rates, the housing market, none of it is real anymore. It's all being controlled from the top, manipulated for political gain. And when that happens, the value of everything starts to erode. But here's the most important insight. We're not just watching history repeat itself, we're watching it evolve into something far worse. This is the moment when everything shifts. And the question isn't whether we'll see another financial crisis, it's whether we'll be ready for it when it happens. If this resonates with you, make sure you're following, because we'll keep digging deeper into how all this is going to play out.